Fed Chairman Jerome Powell says the time has come to start cutting interest rates. But what exactly does that mean for mortgage rates and specifically their timeline? My name is Nick Kristof with the Kristof team, and today we're going to address that question. We get a lot of inquiries asking about when do we anticipate mortgage rates to start falling after the Fed's kind of announcement, and particularly Jerome Powell's conversation on Friday out in Jackson Hole, indicating that basically the time has come, that in the September meeting, there's an expectation that the Fed is going to cut interest rates. But what exactly does that mean for mortgage rates? Well, the short answer is it's in there. It's like the Prego spaghetti recipe commercial.
Hey, Pop, look, it's in there. And you need... Whoa, huh? It's in there.
The market doesn't move, or rather the market doesn't wait for news to come out to start to move. It starts moving based on expectations of what's going to happen in the future. And one way that you can see that that is taking place is if we take a look back here. Let's look at a couple of these charts. So this is a chart of the mortgage-backed securities over time, and really want to draw attention to is this timeline right in here. If we look at the dates in here, this is July the 3rd of 2024. And if you take a look here, without getting into all the specifics, it doesn't move in a straight line, but there's clearly a trend here, right? There's a trend where things start lower, they go up higher right here from July 3rd onward to the current. And if you ask the question, okay, what happened on July 3rd for this to really start moving and changing? And if we look back to headlines from July 3rd, well, US factory orders unexpectedly fall in May, July 3rd. So all of a sudden the news started hitting just like this, indicating that maybe the economy is not functioning as strongly as the Fed or others had expected, and we might see that impact inflation going forward. We might see that impact jobs going forward. And ultimately, that was the beginning of things starting to change in the mortgage-backed securities market. So why do I say all that? I say all that to say, if you're waiting for the Fed meeting September 18th, for that announcement to find out what happens to mortgage rates, well, I tell you, the train has already left the station. It's in there. The mortgage-backed securities market has been trading on this data, and when we get into September, it will be for nearly, or over at that point, 2 months worth of data where they've already started to build that in. So the mortgage rates you're already seeing today have already included and built in the expectation of a Fed rate cut in November. So if you're waiting for in September. If you're waiting for September, that is going to be too late to see what's already happened in mortgage-backed securities. If they do something unexpected or more, yes, we might see a change of trajectory there. But if they move as expected, then we've already seen those numbers baked in. And it's time to call now and to have those conversations now because the market's already on the move. If you have more questions about how the markets are working or how they impact your particular scenario, feel free to reach out to the Kristof team.